Guys, and welcome back to Financial Fluency. So today we're going to be discussing on savings and investments. In my previous video, the budgeting video that I did, I said we are going to start today on savings and investments. Okay, so let's get right into it. So last week, or rather in the previous video, we budgeted our income. I am hoping that everyone did their own budget of the income that they are receiving, and you saw where you're supposed to adjust and where you're supposed to maybe like improve. And I'm so sure if there's an area where you're supposed to improve is on your savings and investments. Okay, so let me start by saying this. Nowadays, we no longer save, we invest. But for you to be able to invest, there's some certain investments that you cannot be able to venture into them, not unless you have capital. And how are you going to raise that capital, especially if you don't have a way that gives you that large amount of capital all at once? You first have to start by putting some little money somewhere so that you can be able to gain the capital, so that you can be able to raise the capital for your investments. And that is what we are calling savings. But then remember, I said that nowadays we no longer save, because saving in simple terms is putting your money away and not spending it and waiting for it to accumulate. There's nowhere it is earning interest. So that is the old version or the analog version of saving. But right now we save, but in an investment kind of way. What do I mean? If you're there and you want to raise capital for your investments, for your long-term investments, this could be, for example, starting a business or buying shares or stocks. This could also be, maybe you want to venture into bills and bonds. Venturing into bills, you need a minimum of 50,000. Venturing into bonds, you need a minimum of 100,000. So you have to find a way to accumulate that large amount of money so that you can be able to start investing in the big projects, if I may say so. Okay, so how do we save? I'm putting the quote unquote, because remember I said we are not just putting our money somewhere where it's not earning anything. With today's world and with inflation, right now I believe maybe inflation is around 5 to 6%. Yeah, so you have to make sure that you're putting your money somewhere where if you take the return it's giving you, maybe even if it's 8%, if you less 6% inflation, at least your money has a 2% growth. Okay, and how can we achieve this? We can achieve this through saving and investing in a money market fund. Okay, so currently I believe that maybe the lowest money market fund right now could be giving you a return of 8%. That is the minimum at this point. Right now, most money market funds are ranging between 9% and let's say 11 to 12%. Okay, so how can you be able to achieve that? First of all, you have to identify your goal, identify how much money you want to be putting aside. Is it on a weekly basis? Is it on a monthly basis? Okay, so there are money market funds where you do not need any startup capital, versus there are money market funds where you need an initial outlay. The initial outlay could be maybe like 5,000 or 1,000 bob. The money market funds, when you open up an account, you have to deposit something. That is what I mean by an initial outlay. You have to deposit something, and most of them usually ask between 1,000 bob, 2,000, and maybe 5,000. That is in Kenyan shillings. Okay, so first of all, you have to identify your goal, identify how much you want to be investing, you want to be saving towards that money market fund. If you're a business person, you earn on a daily basis, you would need a money market fund that gives you that flexibility to invest, not in a regular way and not in a fixed kind of way, not in a fixed amount. For example, today business might be so good and you earn a profit of 600 shillings. You need to be able to take your 600 shillings and invest it in your money market fund. Tomorrow business might be a little bit lower and you get a profit of maybe 400 shillings. You need to have that flexibility of taking your 400 shillings and investing it in your money market fund. So when you're hunting for a money market fund, when you're choosing and selecting your money market fund, make sure the back of your mind, you know what your agenda is, you know what your end goal is, and you know how much you are able and willing to be investing, and is it on a weekly, is it on a daily, on a weekly or a monthly basis. Okay, if you go to the Capital Markets Authority website, you'll be able to see the list of all the money market funds that we have that are regulated by the Capital Markets Authority. That is also something else to make sure that is something else that you also need to pay attention to. Ensure that the money market fund you're selecting is regulated by the CMA. It is regulated by the Capital Markets Authority, okay, for the safety of your own money. After you have identified a money market fund, go back to the web, research about it. They usually have a customer service number somewhere. If you need to go deeper, you can take the contact and contact them. If they have an office in the town where you're living, you can visit them. Make sure you exhaust all the questions that you have before you're confident in opening an account and actually putting your money into that account, okay? So that was the first thing. Identify how much money you're willing to be putting into your money market fund, okay? The other thing that you're supposed to watch out for, are there any fees that are associated with the money market fund that you're opening? So your money market fund could be telling you that your money will earn an interest of 9% per annum. But with that 9%, does it have other charges that are associated with you investing your money with them? Because there could be, and you might find out that they told you your money will be it will be yielding a return of 9%, and then at the end of the year, when you do your calculation, you realize that your money has actually earned it has yielded a return of 7%. You have an interest of 7%, and so you're wondering, where did the 2% go to? Did you ask these questions? Did you ask if there are fees associated with your money market fund? Did you ask administrative fees, just any fees, managerial fees? There are so many fees outside here, so make sure you know, are there any fees that are associated with this account that you're opening? The third thing, and one of the most important thing, is the ease of access. So you want to be able to, your money should be liquid. You should be able to access it whenever you need to. And how long does it take for you to be able to access your money? Is the length that it takes for you to access your money, is it compatible with your needs? If you're using, okay, let me go to another point so that I can be able to put these two together. In savings and investments, we have different types of savings, okay? Number one, we have an emergency fund. An emergency fund is supposed to give you a financial cushion against emergencies. So let's say medical bills, medical emergencies that do pop up, and with it there are medical bills. An emergency fund is supposed to give you that caution, okay? A car breakdown, your car breaks down, it needs a major repair, and you are not anticipating for it. Your emergency fund is supposed to give you that caution. Job loss is also another thing that your emergency fund is supposed to give you a caution against this kind of emergencies. And you need an emergency fund so that you can have that peace of mind, so that you can be stress-free and be able to invest your money, to be able to invest your money in a clear mind, okay? So your emergency fund, it should be about, for a minimum, for a startup, you should have 3 months of your monthly budget put aside for your emergency fund. What do I mean? If your household spends 20,000 a month, you know that your 20,000 caters maybe for your rent, it caters for your food, it caters for your children fees. If you pay your children fees on a monthly, maybe you subdivide the fees on a monthly basis, maybe the 20,000 caters for everything in your household, then that means for a startup, for a minimum amount, you're supposed to have 60,000. That is 20,000 by 3. That is your expenses that will last you for 3 months in case of anything. All right? So different ways of savings. You have an emergency fund, okay? And then after you have built your emergency fund, and then now you can go into saving and investing for investments, okay? And these investments, these are the things we have spoken about: the treasury bills, the treasury bonds. If you want to invest in a certificate of deposit is whereby you go to your bank with your money, you give the bank your money on a fixed period, maybe for like 6 months or 1 year. You give them your, and the bank will give they'll give you a percentage whereby your money will be able to yield a return. But you put your money for a fixed amount of time. It could be 6 months, it could be 1 year, or that way, okay? So that is a certificate of deposit, okay? So as you can see, if you want maybe to invest in, okay, though nowadays you can actually invest in stocks and shares with with less than 1,000 shillings. There are shares which you can actually get for less than 1,000 shillings. You can decide to be taking your 1,000 bob every month and putting it into your shares or your stocks, okay? But if you want to do the big, if you want to, even rates, actually, real estate investment trust, you can actually invest in rates with as low as 500 shillings. So true story, my first rate, I actually started at 500 shillings. Yes. And then I gradually kept on growing until where I have arrived right now, that I am able to at least invest more than 500 shillings. But I started with 500 shillings. Every month, I just took 500 shillings and put it towards my rates. The same way, you can also take 500 shillings, put it in your MMF, if your MMF allows you to invest as low as 500 shillings, okay? The same way, you can also decide, let me take 500 shillings and put it in a stock somewhere. So you can see that with 1,500 shillings, you're able to diversify your portfolio, and you're able to actually invest in a number of things. And you see from that, you're not just saving. Maybe for your money market fund, you could be saving. You could be saving for your emergency fund. And then you have your stocks. In your stocks, you're actually investing. You're not saving, because at the end of the year, you're going to earn dividend according to how much you've been able to invest. You're going to earn dividend. In like 5 years time, you're going to earn capital gain. And what is capital gain? Maybe the IPO for your stock, that is the initial public offer, was 50 shillings. And then now, 5 years down the line, your stock is going for 80 Kenyan shillings. The difference between 80 and 50, that is per share, that 30 shillings, that is your capital gain. That is also another way of earning through stocks and shares. So you earn through capital gain, and you also earn through dividends. So you see, with as little as 1,500 shillings, you're saving for your emergency fund, you're investing in your stocks, and you're also investing through your rates, through your real estate, the real estate investment trust. Because even in your rates, you're also earning dividends, okay? So those are some of the common ways where you can be able to invest with a really small amount of money. So don't say that you do not have money to put towards your investments. And you guys, we are here so that we can be able to build our wealth. All of us want to build wealth. And what is the wealth formula? The wealth formula is equivalent to saving plus investment. Remember that saving is a foundation, but it is not growth. Investing is your wealth creation, but it takes consistency, it takes discipline, and it takes time. You have to be patient, and you have to be you have to be what is this word I'm looking for? You have to purpose. You have to be consistent, and there's a word that is disappearing in my head. You have to be intentional. You have to be intentional about investing, okay? And when you do that, trust you me, 10 years down the line, you'll be a happy woman or a happy man, okay? So I'd like to stop there for today. Remember guys, we are saving and investing so that we can be able to build our wealth. And there's a challenge I'd like us to actually do this week. So we created, I'm hoping that all of you created your budget from the previous video, okay? So I want you, number one, is to note where your money is going. You already did that. You already saw where your money is going from your budget, okay? And then number two, I want you to see if there's any liability. And what is a liability? A liability is anything that takes money out of your pocket and it does not return it into your pocket. It's okay. A liability is something that takes money out of your pocket. An asset is something that puts money into your pocket. So I want you to notice one liability, just one, that you can be able to eliminate, like completely eliminate, even if it's just 500 shillings. And what could this liability be? Maybe it is you eating a kilo of meat every time you're getting paid. If you're really intentional about you investing, you can forgo that kilo of meat. Eat a half. You will still satisfy your taste buds. And it's just the mouth that knows we are eating meat. The stomach doesn't know. The stomach is just digesting food. And if you really need proteins, buy beans, 2 kgs at 180 shillings. You'll be able to eat proteins for a longer time compared to when you're just eating meat for one day, a kilo of meat. So take that 500. That is step 2. Find a liability that you can completely eliminate. Okay, you've already tracked your spending. Find a liability that you can completely eliminate. That is step 2. And then step 3, I want you to take that money. I want you to take that 500. As you can notice, I am emphasizing on 500, 1,000 shillings, because I do understand. I understand that most of us have this excuse of, oh, I don't have enough money to put into my savings or investments. That is why I'm using the least possible amount of money, okay, so that you can see it is possible. So I want you to take that 500 that you have eliminated from your liability and put it towards an asset. How are you going to do this? If you're in a circle and maybe you have been contributing shares every month, I want you to increase that share. At the end of the year, you're going to earn more dividends than you did the previous year. That is through a circle. If you do not have a money market fund, I want you to find a money market fund and open up an account. Start putting that small amount of money that you have salvaged from the liability that you were consuming every month. I want you to take that money and put it into your money market fund, okay? I want you to take that money, find a stock that you can be able to purchase with as little money as possible, and then take that money every month. As soon as you get paid, just take it, put it towards your stock. Take it, put it towards your stock, and forget about it. If you can, open up a REITs account, okay? Open up a real estate investment trust, okay? There are so many outside here. Just do your thorough research. You'll find one, okay? Take up that amount that you've salvaged from the liability and then put it into an asset. Remember, an asset puts money into your it puts money into your pocket. Okay, that is number 3. And then number 4 is the icing on the cake. I want you to comment below. I want you to tell me, what is that one liability that you found from your budget that you can be able to completely eliminate? Tell me, what is that one liability that you found and you are going to actually work on it. You're going to eliminate it and you're going to put that money towards an asset. Okay? So that is it for today. I'm so grateful if you stayed until the end. Make sure if these videos are helping you, remember to subscribe and remember to like and also share and comment down below. Tell me what it is you'd like to know and I'll be sure to tackle that topic. So it's bye bye for now. I'll see you next time. Bye.